Well, ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Kickstarter video. Today's date is October 4th, 2024. Happy birthday, Mom. Love you. In the Kickstarter video, I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar. From a technical perspective, we just had US jobs, non-farm payroll rise by 254,000. We had the unemployment rate decline to 4.1%, and a big debate on CNBC whether or not this is going to be inflationary or not. We will see, but what we do know is that the chance of a 50 basis point cut has been slashed to, it's probably around 10% right now. We're seeing yields move higher. We're seeing stocks move higher as well, and we're seeing the dollar move higher. So let's get going. All right, let's look at the 4-hour chart of the euro versus US dollar. We fell below this swing area, which comes all between these levels right through here. This is all developed going back in time to here. Should have moved that over there. And in trading this week, we moved down toward that area and then rebounded into today. Had a market going sideways before the data came out and pushed the price below these levels right through here. We also fell below the 50% midpoint of the move up from the August 1 high to the high price right here. This area right here, starting with the 50% retracement level, is now risk. As long as the price remains below those levels, the bias remains to the downside. Now on the downside, we have this other area right through here, which has a nice swing levels all through here as well. You can see the number of different times that the market came within this area before basing and moving higher right here. So we're moving back down toward this area right here, which is near the 61.8, 1.09419, 1.0949 is that target area. And then below that, we have the 100-day moving average. We moved below the 100-day moving average back here at the end of July, early August. And then raced to the upside through there, probably an employment number or something like that pushed the price higher there. And so that area is going to be a key target on the downside as well for the euro versus US dollar to get to and through on the downside. So, close risk now at the 50% retracement. I know we're at 109.60, so that's about 39 pips away from that. Close support is probably closer right now at 94 at the 44 level, and then the 100-day moving average at 109.28. Let's take a look at the dollar versus yen next, in this currency pair. Also took a move to the upside in favor of the US dollar, I should say. And in the process, the price has moved above the 38.2% retracement of this move down from the, I guess that's the July, early July high, down to the low price that we saw in September. 38 point comes in 148.11. I think the price did dip a little bit below that level, but it has since rotated back to the upside. So watch that level as a support. In the process, we also moved above this area right through here, and this area comes between around the 147.34 level. So those are the support levels now. Those are the levels that we broke to the upside. We want to see the price continue that momentum in that direction. On the top side, the next high price right here from the month of August comes in at 149.356, and that will be the next key target on the top side for the dollar versus yen to get to and through. If we get above that level, then we start to look toward the 50% and the 200-day moving average over here. We did have the Bank of Japan this week come out and say, or imply, that a future hike was probably off the table given the instability of the markets. And we also had the government, the PM, also say kind of get off the idea that rates were going up as well, which was supportive of the dollar versus yen, selling of the yen. And now the data helps to push that price even higher in trading here today. We'll see if that momentum can continue. Finally, let's take a look at the sterling versus US dollar. And what a week it's been for this currency pair, falling sharply yesterday on BOE comments that the Bank of England might have to be a little bit more aggressive in their cuts. We did see a rebound into the close yesterday. I took the price back into this swing area right here, and we saw further momentum in the direction to the upside in trading here today, but fell short of the 200 bar moving average on the 4-hour chart. The number obviously to push the price lower, and we are now below the low of this swing area. I'm going to put it on the 4-hour chart to give you a better view of what that looks like. Here's that swing area right through here, where we also fell below the low price from yesterday, currently trading below that level as we speak, and looking toward the 50% retracement of the move up from the low price that we saw in the month of August to the high price that we saw in the month of September. So the 50% comes in at 1.30480. That level also corresponds with some swing lows and swing highs right here, here, and here. So it seems like that would be a good target on the downside. And even back here, we put a horizontal line right here. So be aware of the 134.88 level. We're currently trading around the 88 level, so we're about 40 pips away from that level on further momentum to the downside. Expect to stall near that level, but if we do break below that level, opens the door for further downside momentum in the sterling versus US dollar. On the top side, it would take a move back above the 38.2% retracement at 1.31396 to probably get the shorts a little bit uneasy. So be aware of that level. If we move above that level, then we're about back between the 200 bar moving average of the 4-hour chart and the 38.2% retracement as the target trading area I would expect. So there you have it. A look at three of the major currency pairs. The euro versus US dollar, the dollar versus yen, sterling versus US dollar. From a technical perspective, my name is Greg Michalowski. Good fortune with your trading. Bye-bye now.